Hello and welcome to Money Matters. I am Folashade Ogurinde. Gabon's military coup has sparked the steepest daily drop in its dollar bonds on Wednesday since the height of the COVID-19 pandemic, and came just weeks after the country carried out continental Africa's first debt-for-nature swap. The country's bond due for repayment in 2025 fell the most by as much as 14 cents before recovering to end the day down almost 8.5 cents on the dollar at 85 cents. Though Gabon issued one bond as part of its debt-for-nature swap this month, rising global interest rates and concerns about debt levels have meant most African countries have been largely locked out of international debt markets for well over a year. So what does this mean for the African continent? Owolabi Samson, who is an associate research and portfolio management at Zcrest Wealth, joins me now. Thank you very much for joining us. Now, Gabon's military coup has sparked, something many will call the steepest daily drop in its dollar bonds by as much as 14 cents. What do you make of this situation?
So thank you very much. Well, concerning this, the major thing that we're just going to look at is the fact that you understand that whenever a situation like this occur, it tends to drive this kind of a negative sentiment in an economy, because one of the major factors that investors consider before investing in the country or purchasing its Eurobond is they tend to look at the political stability of that country. They want to know how stable the policies, the economic and the fiscal policies of the country is going to be like. So in a situation where there is a coup, and where there's a change in the government of an economy, it tends to give this kind of uncertainty, and it tends to give investors this kind of a fear on the security of their funds, and also on their returns on their funds. So this is one of the major reasons why we've seen this steep decline. You can see that the Gabon's 2025 bond just dropped significantly by 9.6%. It's initially dropped by 14.7%, and also the June 2021 bonds also dropped by 7.9%, and the November 2021 bonds dropped by 8.8%. So this shows you how significant and how important this particular news is, and how deep it has affected the economy. So it is a possible trend that we expect, and it's also having the kind of a contagion effect on the sub-Saharan economy.
Now, are there concerns that there could be an immediate impact on other bond issuers in the sub-Saharan Africa region?
So concerning this, I believe this is a possible situation, because when you look at it, you can see that the presidents of Rwanda and some other African countries, they decided to change their military personnel. They decided to relieve some people, and they're just being cautious, because this thing is based on the fact that people are somehow not satisfied with the outcome of elections, and also the cost and standard of living in the country. So when you look at African countries across, you realize that we tend to have similar problems across the country. We tend to have similar issues that are affecting the country. So this is why it is a possible situation that is going to affect other African countries, because we've seen the trend. It started with countries like Guinea, then we went to countries like Sudan, it went to Burkina Faso, and then went to Niger, and now we have Gabon on the list. So this particular occurrence is showing this kind of a trend, which is why investors are somehow taciturn and very, very pessimistic about the sub-Saharan African Eurobond. So this particular issue is something that we might see it affect other sub-Saharan economies. And when you look at the graph of the yield curve of these countries in the sub-Saharan Africa, you'll see that there's been a significant sell-off for a while now, because most of African countries here, we tend to have issues concerning the election results, and also the credibility of the election process. So when you consider this trend, when you look at the things that are happening, you realize that it's something that might have a spillover effect that is going to give these investors this kind of a fear that this might happen to other African countries. So this particular issue is something that we still expect that is going to drive a sentiment in the market, and it might affect other economies in the sub-Saharan Africa.
Now, with a production of about 200,000 barrels a day of crude oil, Gabon is the second smallest OPEC producer. How will this affect crude oil production in the Central African country?
Okay, so well, concerning this might affect crude oil production. It's something that it depends on the structure of oil production in the country. When you look at how oil production is being done, you realize that if we have a larger chunk of foreign investors, they might have this kind of a fear of this kind of a worry that the new government will want to implement some policies that are not favorable to them. So it is possible that it affects. However, based on my current research, we still saw that a particular private equity firm, Salah, which is one of the biggest oil producers in the country, they came out to explain that this particular action has not affected their productivity in the country and it has not affected their oil producing activities. So oil production activities rather. So when you look at this, you realize that it's possible that we may not see the big effect on the country's oil production. However, to lean on the positive side, there's a possibility also that this particular issue might also be like a boost production in a situation where there's been like this kind of a corruption or there has been a form of like in a form of non-transparency when they are producing the oil. So if this new government comes in and makes some certain different policies and also curb some kind of oil theft and corruption in the oil sector, we might see improved production in the oil sector. However, based on my findings, I still believe that this is not really affecting activities because the Asala Group, they have been the one that has, let's say, helped the country increase its oil production by 30% since 2017. That they acquired up to like 45 since 2017 rather, that they acquired a substantial part of the oil production in the country. So this kind of like shows us that it's possible that it doesn't really affect oil production in the country.
Now, there are fears that the military takeover will force investors to reassess their interest in Gabon and the wider political landscape in the region. How serious is this situation for Africa?
Okay, so well, concerning this, I believe that we need to like take a particular measure to find a way to curb the recurrence of these activities because when there's a military coup and it is like now having a contagion effect that we are seeing the trend spread across African countries, it gives this kind of a perception that politically we are not stable. Give this kind of a perception that people are already like tired and exhausted and frustrated with the kind of government that we are seeing. So, and you know, it's more like having a bad egg in across a basket that is full of good eggs. There's no way that this bad egg will not affect the other ones. So if we are seeing this particular issue occur, it is going to affect other African economies. If we see this issue spread out, maybe it starts affecting other African countries, we'll see investors remain taciturn and remain kind of have this kind of a seclusion for African countries, so they might not want to like dive in fully into African countries. So there's a possibility that if this thing occurs going forward, it's going to affect the African space.
Well, Owolabi Samson, Associate Research and Portfolio Management at Zcrest Wealth, thank you very much for your time and your contribution. Well, we'll take a break now, but Money Matters returns shortly. To stay with us. Welcome back to the program. Foreign portfolio investment on the Nigerian bourse has suffered a decline due to the volatility of the Nigerian foreign exchange market and the instability of the naira. To this end, the NGX is set to introduce dollar-denominated bond listings, especially for companies that generate revenue in dollars and also report profits in dollars. The The aim, according to the NGX, is to attract more listings and tap into foreign exchange usually left unused in many domiciliary accounts. But what significance will this strategy have on the economy, and does this portend any risks? Now, Richard Akimoladun, who is an equity trader for CSL Stockbrokers, joins me now. Thank you very much for joining us. Now, talk us through NGX's plans to introduce dollar-denominated bond listings.
Thank you for that question. Just a bit of background to why the NGX is looking in that direction of encouraging listed entity to actually list more dollar-denominated bond and securities on the NGX. If you look at what is happening lately in the markets, we noticed that before now, we used to see the market dominated by foreign portfolio investors. They come, they like our market, and they always their participation is always higher than the local players in the markets. But what we've noticed lately is that they a bit of stay on the sideline and watching what is happening due to the volatility in our FX markets. Because if you look at the purpose of any investment is for gain and for profitability. So when they come and they invest in some of our listed entities, their purpose is just for return on their investment. But if you look at the late volatility in FX markets, that there's no amount of gain you can record from the market that the volatility will not wipe out by the time you're taking out your money. They love our markets, but that has been a big problem for them lately. And NGX, in their wisdom, they are looking at, I think they've noticed this, that we look at we've seen significant drop in the value of FPIs trading in the market. So in their wisdom, they are looking at, as a regulator, how they can actually bring these people back, that they know the problem, and they are trying to solve it. That, okay, if these investors can actually have security that they can invest in dollars, and when they are leaving the country, they can actually sell their security in dollars and have their dollar return. So that they will, the volatility will not actually affect them going forward. So that is just the background of why the NGX is looking in that direction to actually encourage entities that are earning dollars in their activities, that they can list in dollars, and actually their stock can be traded in dollars.
Now, according to the NGX, the aim is to ease foreign currency access for companies in Africa's biggest economy. What are your thoughts on this?
So, as I've explained, just to improve activities, to increase activities in the market, and also that because anytime there's volatility in our FX market, we always see the FPIs leaving the market or stay back and watching what is happening until we have stability again before they come back to the market. So to actually guide against all these back and forths coming in and rushing out again, that if they can have dollar-denominated instrument that they will invest in, at least that might make them to stay longer in the market. So that's why the exchange is looking into that direction. But I guess they are just coming up with that idea. I'm sure there's a lot of this and that still need to go into it. They still need to get approval from their regulator, which is the SEC, and a lot of they need to think through it very well so that it will not be a failed instrument. So I'm sure that they are doing their homework, and by the time they will come out, it's going to be a very good product for foreign investors to actually to actually invest in it.
Now, how significant is this move for the economy?
So, if you look at this dollar issue, volatility in the FX market, you will see that every sector is looking. They are coming together to actually think through what solution they can provide that actually can drive their sector going forward, that they will not have these sort of itches in their activities. So that's why the exchange is looking into that direction, so that they've realized the problem and they are trying to provide solution to it by actually encouraging listed entities to develop products that are dollar-denominated, so that activities can continue, so that we don't have all these low patronage of the market because the FPIs are no longer trading or participating in the market. So that's why they are coming up with this idea. I think it's a noble idea, it's a welcome idea that is going to drive the market in a positive direction going forward. Thank you.
Finally, do you envisage any challenges in the actualization of this strategy?
So the challenges I just emphasize is the fact that that the regulator should be very careful not to dollarize the market, because by the time you introduce such instrument to the market, you will see even the retail investors present. You see them trying to, because if you are doing such a trade, you must fund your account with a dollar. Your account will be funded with dollar. So you will see the retail end of the market to chasing after dollar, and I think that might put more pressure on the FX market going forward, because everybody needs to source dollar, because before you can participate, you need to source dollar in order to actually take advantage of those products, and that might put further pressure on the FX market, and that might not be good for the FX going forward. That is the only problem that I am saying that might come with this product.
Well, Richard Akimolado, who is an equity trader for CSL Stockbrokers, thank you very much for your time and your contribution. And it's a wrap on this week's edition of Money Matters. Join us again next time. I am Folashade Ogurinde. Bye for now.